Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 17th of May, 2021. So welcome everyone guys. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, let's quickly have a read through our risk disclaimer. The content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, guys, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So feel free to check us out here on jfdbank.com and click on the research tab right there on the top. So guys, so I hope you're all feeling nice and refreshed. I hope you had a wonderful weekend. So now basically back to the markets. Now the first one I want to pick up here is Nikkei 225, and as we can see, today Nikkei drifted to the downside and initially tried to go higher here, but look at this. I mean, look at this perfect move here towards the 28,326 territory. I talked a lot about this level last week, guys, if you remember, and basically, I talked about this scenario here where we could see maybe a bit of a push back up here, but if this hurdle provides resistance, good resistance, then yes, another slide could be possible. And so far, it's doing exactly that. But as you can see, unlike last week on Thursday, this time the index did respect this level, the 27,600 mark, and it kind of did get a hold up around here. So although I have my scenario here to the downside all the way towards this 27,000 mark, and to be honest, that's still gonna stay like this. Still, we'll be very careful near this 27,600 zone. If that gets cleared, then of course, yes, my next target is the 27,000 mark, which is around the 200-day EMA here on this daily chart. So for now, we'll keep an eye exactly on that. If you're a little bit more on the cautious side, you could just wait for a drop below this 27,600 zone. If we get that, then yes, like I said, my next target is the 27,000 area around here somewhere. It might even drift lower, maybe not even reach the 27,000, just maybe find support somewhere around here and then rebound back up. So I mean, we've seen this happening several times, so keep that in mind that this could still happen. For the upside, what I need to see here is probably I'm not gonna look at any levels, or actually, let me just probably rephrase that. Maybe I'm gonna stick to this little area right here. So this 28,760 mark. So if we get a nice good push above this barrier, then yes, we could maybe see a bit of a move higher again, because at the same time, well, we would be placed already above this upside support line taken from the low of the 19th of March of 2020, and we could also climb above the 21-day EMA, which some buyers could see as a good positive thing here. Don't get me wrong. I mean, I'm not going to start getting into some downside lines here. Basically, what I'll say here is right now is if we're going to climb back above this upside line, above this barrier, then this is when I'll start considering some higher levels, because again, there are still a lot of ifs here, but nevertheless, let's keep it short and simple for now. Shanghai Composite, so looking beautiful here and pushing above this 3,496 territory, the one that I talked about a lot last week and the week before that. So basically, we are still trading within this rising channel. And what I said to you previously, that although yes, there is a chance for this for this index to move higher. Still, I would prefer to wait for a push above the 3,496 zone in order to get a little bit more excited with the upside. And yep, because you can see why. So we finally managed to clear that, and of course, let's see. The index is not finished yet. We're still trading here. Let's see if we stay above this area. If we do, then my next target, of course, is the 3,542 territory, approximately around here, or this upper side of the rising channel. And then I'll take it from there, guys, because, again, I don't want to rush into anything. So for now, let's keep it short and simple. Now the German index, DAX, and yeah, looking at this, all this, yes, I mean, it is looking quite interesting. So first of all, yesterday, on Friday, we closed just bang on this downside line taken from the high of the 19th of April. So in a way, we could say that yep, a holdup happened. So we should be very careful, and that's true. But the cash index did drift a bit further, and we saw a kind of an almost we saw a test of this all-time high. Maybe this is left kind of the actual test of that level is left for today's today's European trading day, for the European trading day. There we go. And yeah, then we'll of course keep a close eye on it, because if that will be quite interesting to see if we can create a new all-time high. And if we do, then all eyes of course are going to be on the same 15,502 territory, approximately around here. If it stays above it, then yes, we could go for some higher levels. Currently, the cash index is trading at around 15,413 zone, so basically just slightly below this hurdle. And I would say that basically it's kind of bang on that level. So that's why for now I'm going to be, like I said, very, very careful. And to be honest, I'm leaning a little bit more towards the upside here. But of course, anything can happen. So that's why we'll be very careful here. And for now, we're just gonna go slowly, as always, whenever we are very close to the all-time highs. For the downside, I need to see a drop below the 15,092-93 zone right here. At the same time, we would already be placed below the 21-day EMA, or actually, yes, actually, we'll keep an eye on that level. Initially, I wanted to say that maybe actually we're going to keep an eye on this level, the 15,268. But to be honest, if it drifts at the moment, at this point in time, if the index would drift lower below that level, we would still be above the 21-day EMA. So basically, kind of not really that strong confirmation, unless we could start looking at this little area right here, the Friday's low, which is around the 15,215 mark. So a drop below it may then place the index below the 21-day EMA. So that's why it's a little bit of a tricky one here. For the downside, what I would say, actually, maybe, you know what, that's probably the good option to do. I mean, we ignore this hurdle. There we go. Yes, so I think this is going to be much better, because, again, at the same time, in order not to miss out maybe on a little bit of a territory here, so if we drop below Friday's low, at the same time, we could also drop below the 21-day EMA, and then, yes, potentially more sellers could join in. I mean, but we're not going to drag this one way too much to the downside, because, again, let's not forget that we are, it seems like that we are stuck in a range. So if, for example, the index now drifts back down here today, for example, because it kind of came close, the cash index did come close to testing the 15,502 territory. It did kind of hang around here during the Asian session, the cash index I'm talking about. So basically, and then now we're seeing a bit of a drift lower. So let's put it this way, that if we start falling back below this 15,215 zone, Friday's low, the same time, like I said, we could be placed below the 21-day EMA, and potentially we could drive back towards this key support zone right here. But again, I'll pick up on this one, of course, if we get to this point. But at the moment, guys, I'm still kind of leaning a little bit more towards the upside. But probably, if you want to be a little bit more on the safe side, wait for that pop above the 15,502 territory, and then yeah, we could go for some higher levels. DXY, very quickly on DXY, drifting back down, so basically it failed to break this downside line, and most importantly now it's drifting back below this upside line, so and below this 90.42 zone right here. So what I'm going to do here is I'm going to take a bit of a careful approach. Well, to be honest, as always. Basically, what I need here is I need to see a drop below this hurdle right here, the low of last week near the 89.98 zone here, and just to be a little bit more on the safe side, because yes, we are trading below the downside line. So basically, the trend line is to the downside. Yes, we are below this upside line as well. So basically, there's a lot of indication that we could see this one drifting further south. However, let's see if this is not going to end up being like just, let's say, on the shorter time frame, forming maybe somewhat of a triangle pattern here. Basically, if the index is not going to get, is not going to start getting squeezed or something. So that's why the safer option here is probably for the downside is to keep an eye on the 89.98 zone right here, the low of last week, and then go for lower levels. For the upside, previously I talked about this level, and to be honest, I'm going to still stick to this hurdle at the moment, this 91.42, but if let's say if you're a little bit on the risky side, you could start looking at this little area right here. Let me just put the arrow, this level right here, the 90.87 zone right here, approximately around here. But at the same time, a break below above this barrier would mean that the index is already above the downside line, is above the 21-day EMA, and potentially more buyers could join in and drive this one towards the 100-day EMA. And this is where my that's the more comfortable level for the upside is. So, but of course, again, if it travels higher here, but let's say travels higher, let's say if it does this move, breaks above this 19.87 zone here, we could aim for that 100-day EMA, but if once again it provides good resistance, another slide here could be possible. So that's why I'm kind of looking at these separate, this upside as the two separate steps here. So so yeah, keep that in mind, guys. Gold. Very, very interesting, and we can see why. Let me just adjust. There we go. Boom. So we're coming close again to this downside line. So the idea kind of is kind of working out. I would say we're coming close to this. Well, I should say we came already close to this 1855 territory. We hit that level, and now we're kind of flirting with this downside line. If you want to go for some higher levels, wait for a break of this downside line, and probably also wait for a daily candle to stay above the downside line, because then potentially more buyers could join in. If you're a little bit more cautious, of course, then all eyes are going to be on the barrier right here. Let me just put this one here, the arrow here. There we go. The 1875 territory right here, which, as you can see, acted as a fantastic area of resistance back here on the 21st. And the 29th of January. If that, like I said, if that level gets cleared, then yes, this again will confirm another forthcoming higher high, and further acceleration to the upside could be possible. For the downside, to be honest, it's a pretty straightforward one here. I mean, it's a very conservative approach. And I would need to see a break of this upside line. And again, depending on how this is all going to play out here, I'm not talking about any levels yet, because again, depending on how this is going to start trading here, maybe it'll start coiling up here, maybe we don't know. I mean, at the moment, yes, everything is looking quite positive, so let's see if this downside line gets broken. But if it doesn't get broken, I mean, we could see a slide back down, and maybe we could then see another rebound from the upside line. So basically, you know the scenarios. I mean, this happens many times, so that's why I want to take it kind of carefully, cautiously, and yeah, just kind of try to evaluate all the potential scenarios. So that's why, for example, at this point in time, I'm not going to stick to any level. I'm gonna just keep an eye on this upside support line. If this upside support line gets broken, then yes, then this is where I'll start keeping an eye on some of the levels. Now, jumping into WTI oil very quickly. So WTI oil is still trading within the rising channel pattern. And yeah, for now, I would say it's a similar situation like with the Shanghai Composite. Basically, we also have a rising channel, but I said to you we were going to wait for this break above the 3,486 territory before aiming for some higher levels. Here, basically, I'm going to stick to the same kind of rule. I'm going to stick to this this rising channel, of course. Yes. But I'm going to stick to the 66.40 territory, which is currently kind of, well, not currently, but still is acting as a nice area of resistance. Because as you can see, we did recently saw a few overshoots here, but we didn't really see the daily candle staying above it. So that's what I need here. I need to see a daily candle staying above that area, above that hurdle. If something like this happens, then yes, higher levels could be met, guys. Bitcoin. So Bitcoin is looking quite interesting here as well, because Bitcoin basically did everything what I said it's gonna do last week. So basically, what the scenario was here, that initially I said that if given that it dropped below the 100-day EMA, I said that yes, we might see a bit of a retracement here, maybe towards this 100-day EMA, or this at least, or maybe not at least, but maybe even towards this 52,377 territory. But as you can see, the 100-day EMA was enough, and yeah, it started drifting lower. My next target was the 47,112, which we reached. But I said that if we're gonna break that one, then my next target is the 43,171 zone here, marked by the low of the 28th of February, which we managed to reach as well. But not only that, we also managed to reach the 200-day EMA, and basically good achievement. Now the big question here is, can we see a further move lower? Now this is where I'm going to take a very conservative approach. What I'm going to do here right now is, first of all, let's adjust a few arrows here, no longer needed. So for the downside, certainly I'm still keeping an eye on this 43,171 territory, but I would say let's keep an eye on the current low of today, which is around the 42,321. At the same time, this level here kind of coincides with the 200-day EMA, and basically if we get a clear drop below this hurdle, this will confirm not only a forthcoming lower low, but it also would place the crypto below the 200-day EMA, which could be seen as a bit of a, let's say, a bit of an invitation for more sellers to join in. So yeah, keep that in mind, guys. For now, like I said, that's the kind of game plan. Let's first of all adjust this upside line, and what I'm going to do right now is I'm going to draw a downside line. So guys, that means that if you're looking for the upside, yes, we could consider some higher levels, but here so let's say if the crypto travels back above the 47,112 territory right here, marked by the low of the 25th of April, or in other words, the lowest point of April. If we climb above the lowest point of April, then yes, we could go for some higher levels. But again, you should be very careful, because first of all, we would have the 100-day EMA here, which could provide resistance. Then it could still travel higher, and we could still hit this downside line, which also could provide resistance. So basically, with the upside, it's a very tricky one. If you're really on a conservative side, you could wait for a break of this downside line and then kind of target the upside. So long story short, basically, for now, with the upside, I would say it's becoming a little bit tricky, unless it starts climbing above some of these levels that I just mentioned. Because if you want to, let's say, go for slightly, or let's say even higher levels, or even further, like for an all-time high here, then yes, a break of this downside line is needed. Ripple. So Ripple is, yeah, it's still coiling up. Still, everything's kind of looking quite interesting here for Ripple, although we saw Bitcoin declining. I mean, don't get me wrong, Bitcoin is currently, it seems like that. Of course, I'm not saying that this is for true, but it seems like it's kind of losing its popularity at the moment, because there are some other cryptos that are kind of jumping ahead, and yeah, Ripple is one of those, still holding on here. And as I've mentioned to you guys last week and before that, for now I'm gonna stick to this triangle pattern, and basically I'll I'll wait for a violation of one of the sides before, let's say, targeting the next kind of, or let's say going for the next short-term directional move. So at the moment, like I said, that's the kind of game plan here for or on Ripple. So let's be very careful, cautious, and yeah, let's be try to be a little bit patient. Now, jumping into a few pairs very quickly, AUD, NZD, so one of my favorite ones, of course, and basically, this is one of my favorite pairs because it does move interestingly, and if you remember, I kept talking about this barrier here, the 1.0793. I said that we need the daily candle to stay above that area in order to go for some higher levels because false breakouts just not going to work here for us for the upside. So, I'm still keeping that kind of idea in my head. I mean, if we do get that daily candle staying above the 1.0793, then yes, of course, we could go for the upside. But at the moment, of course, and by the way, what I said to you previously, that if we drop below this hurdle, the 1.0765, then we could consider a move towards the 200-day EMA or towards this 1.0711. We came and tested the 200-day EMA, but we didn't really test this one. But that's still a good result. Now, for the downside, if you want to go for further declines, then yes, probably wait for a drop below the 1.0711 here in order to go for a further move lower. USD JPY. So this one's quite interesting. Of course, looking at this picture here, I mean, straight away, the last kind of 4 candles here seem to be forming a possible bullish flag. Let's see if that's going to happen. I mean, at the moment, still there is some positivity left in all this because basically, let's put it this way: if equities continue to push higher, well, I mean, we could see USD JPY pushing north as well, even if DXY doesn't, let's say, strengthen that much. But yeah, for now, that's the game plan. If you're looking at some higher levels here, guys, then basically I would suggest to wait for a pop-up of the 109.70 territory here, and also I would like to see the daily candle remaining above this area because, again, we had already a break above it here last week, but as you can see, the daily candle did not stay above this area, so that's why I would prefer to wait for a daily candle to stay above this area, and higher levels could be met because again, this is just a simple principle of of a bullish flag pattern here. So again, at the moment, that's what I'm kind of considering it to be, unless it starts falling below the 21-day EMA right here. And then yes, I'll take probably a neutral stance because maybe at this time we could see a break of this upside line. But again, that's a little bit further away for now. Let's keep an eye, like I said, on this 21-day EMA and this 109.70 territory. GBP USD. GBP USD is still holding on, still trying. The bulls here are trying to fight any kind of little decline. You can see a beautiful hold up near this 1.40 zone last week, and a nice rebound from here happened. Yes, I mean, this shows that in a way, the pair seems to be willing to travel higher. However, to be honest, guys, to be on the safe side, wait for a pop-up of last week's high near the 1.4167 here, and then yes, we could maybe go for some higher levels. At the moment, I would say be very careful, be very cautious, and let's see if this upside line gets broken eventually. But again, that's a bit of an area here to do. I would say that if it starts dropping below this 1.400910 zone, somewhere around here, if it starts dropping below it, then we could go for a larger correction towards this upside line, and then of course we'll take it from there. GBP CAD, another interesting one, where the pair seems to be forming a bullish pattern. So as you can see here, we could be forming a possible bullish pennant. We are coiling up right now, even if you look at the shorter time frame. Let me just jump into a 4-hour chart. You can see that this little squeeze that we're getting, basically, yeah, that's what we're going to be keeping an eye on. So yep, something like this is happening right now. So There we go. So yeah, at the moment, guys, I would say keep your eyes on this. If one of these sides gets violated, then of course this could open the door towards the next short-term directional move. But of course also, and this is where I need to kind of probably kind of say make a note here, because yes, all this is kind of looking quite nice, and according to all the TA rules, according to all the textbooks, and but I would say at this point probably stick to some resistance and support levels. So for the upside, for example, what you could do is keep your eyes on somewhere maybe we're above near this level, the 1.7123. A nice good pop above it may also place the rate above the 21-day EMA, and more buyers could join in. For the downside, what you could do here is keep your eyes on the low of Thursday here near the 1.7008 level, and as you drop below it and below that psychological 1.70 zone could spook the bulls from the field temporarily. So also what could happen here, I mean, and this is where I need to kind of always, guys, prepare you for all the scenarios, just to kind of so that you would be aware. So we've seen this happening several times. So for example, it is forming a possible maybe bullish pattern here, like a bullish flag or a pennant, like in this situation. It could, for example, drift heavily to the downside, break below the 1.7008 level, but for example still close the daily candle above it. And if it does that, then we'll get ourselves a nice beautiful false breakout before another breakout to the downside, before another push, a possible push higher. So basically this way a lot of buyers could get stopped out, and then yes, the market kind of could start moving in the initial in the upside direction here. So like I said, you know the drill, guys, and you've been trading as well probably, so you know how it works, and that's why probably I would say that be very careful. If you see this one dropping lower, wait for, if the daily candle stays below this 1.7008 level, then yes, we could consider maybe a bit of a correction lower here, but even then we'll be very careful because we have a bunch of support lines here which could play out, but I'll pick up on that one later. And finally, EURUSD. So very quickly on this, so to be honest, I'm not going to spend too much time on this one because the same analysis remains. For the upside, I need to see still a push above the 1.2182 zone here. For the downside, this is where I'm going to adjust my levels here a little bit, and I will stick to this little hurdle, the low of I think last week. Yeah, there we go. The low of last week near the 1.2051. A nice good drop below it. We could see the rate getting placed below the 21-day EMA, and lower levels could be met. Still, this level here, the 1.1990, is the more comfortable level for me for the downside, but nevertheless. Let's see. Again, I'll keep an eye on this level as well, the 1.2051. So yeah, guys, that's it for this session. I hope you found it useful. Thank you very much for joining in and watching this until the end. I really appreciate your views, your likes, guys. I really do that. So thank you very much, and I hope you have a fantastic trading day. So yeah, stay safe, have your stop loss in place, and everything will be fine. Bye-bye, guys.